Hello from Trend Signal for our review of the data and events the week beginning the 30th of November. We're already actually into December, the 1st of December, Tuesday. This is a very important week for the markets. Last week, a US holiday shortened week with Thanksgiving, and then Black Friday, Cyber Monday, this Monday gone. A lot of focus on the retailers, whether they've had good cheer or not too much cheer or whatever. I'm sure they'll be discounting all the way to Christmas and beyond. They know how to pull a rabbit out of the hat. The buzzword really in the markets is divergence. Divergence, or the different paths that two of the world's largest economies are taking. In particular, the difference between the Eurozone and the US is very stark and very obvious to all now. We've discussed in the past, the Eurozone is very much late to the party with quantitative easing, which was announced in January, which started this March, and it suffered from decreasing inflation or the onset of decreasing inflation and the onset of deflation, and pretty much sort of patchy, weak growth in most of the member states. Whilst the US is in a different sphere, really, with employment picking up, all the sort of key indicators pointing to an improvement in that economy, which is prompting a lot of speculation, quite correctly so, that the Federal Reserve, or the FOMC, the rate setting committee that meets later on this month, will be normalizing its monetary policy. And normalizing really just means getting back to a more normal conditions that existed in the financial markets before the financial crisis. But we've had rates down at these historic lows since 2008, and we haven't had a rate rise in the States since 2006, so a lot to bring up. Before we get that, we have the much awaited monthly ECB policy meeting that happens this Thursday, which is highlighted here. It is not anything to do with a change in rates necessarily, but it's more what they say in the press conference about quantitative easing. Mario Draghi, the president of the European Central Bank, has said we must do what we must to return inflation from its current level of plus 0.1% or flat to the target of less than 2%, and he says we've got to do it as quickly as possible. The options for Draghi are fairly limited. Further quantitative easing obviously is obvious, more stimulus from the ECB, but I think it's also likely that they're going to cut the overnight deposit rate to minus 0.4%. This is the rate that the ECB charge banks to lodge funds with them, so they're going to charge 0.4% rather than 0.2%, but certainly the measures will probably be a combination of an extension and an increase in the current QE program and a cut in this deposit rate. It's pretty inconceivable that the ECB will do nothing. Draghi has made so many hints to the fact that something will be happening. So Thursday is absolutely key. While a lot of it will be built into these markets, and certainly the equities and bond markets feel quite heavy as I speak on Tuesday morning, but another couple of days before we get those results, get that news. A lot is happening this week as well. Being the first Friday of the new month, we also have the monthly employment statistics from the United States, referred to as a non-farm employment change. Non-farm, they exclude the more volatile farming sector, which is very seasonal, hence the reason why it's called non-farm payroll, or NFP for short. Looking for a number of 201,000 this Friday, down from the 271, but I think anything above 180, and I think we are going to be on track for a rate hike, or the first rate hike by the Federal Reserve, which will happen this month on the 17th of December, just looking for the date there. Okay, for this week we have quite a lot of news out, not just the non-farm payroll and the ECB, a number of central bankers, Mark Carney from the Bank of England, Janet Yellen has got a couple of speeches this week as well from the Federal Reserve, so it's all very interesting to see what she has to say on things and drop any hints about the state of the economy and the prospects for a rate rise as we have just been discussing. A lot of manufacturing data out this week as well from the UK, from the US, but this has all got to be put in context of what else is going on. It's unusual to have such a heavy calendar in terms of releases. These are all the high impact ones. The higher impact ones being the red ones on the Forex Factory, but if one looks at all the medium and low impact ones, it would be a considerable collection of data that we just have to sift through the ones that we think are the most important ones, obviously. So we've also had, as I speak, the Reserve Bank of Australia has already deliberated, no change on rates there. Things seem to be improving a little bit, some better data overnight from Australia, no change on rates there. We've also got the Bank of Canada this week as well, no change expected there as well. As I say, quite a lot coming out, but really the focus will be on Thursday with the European Central Bank. There is other data out as well. We also are getting not just the manufacturing but the services sector from the major economists. On Thursday we get the service sector or the non-manufacturing sector in the US as well. All this data is very important as it feeds through to the FOMC and their decision on whether to raise rates or not in a couple of weeks' time. And then on to the big event in terms of the US, which will be the non-farm payroll on Friday. So a lot to consider this week, a lot to prepare for. Best to note down all the releases this week and make sure if you are trading any currency that involves any of these pairs, then make sure you have it logged on your Outlook or in a calendar so you can be reminded of it. Obviously, the events at the ECB and the non-farm payroll are global in terms of their reach, so we expect that to affect all foreign exchange, equity, bond and commodity markets. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.